The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you very much for being with me today, this evening in the wonderful Northern Hemisphere, particularly the United States and Canada. And it's good afternoon to our friends in the lands down under and across the ditch in New Zealand. Wonderful. Okay, so would one of you kindly type in the question box that you can hear me all right, that you're getting this signal all right? Let's see who we've got. Here we are. Andre, thank you, Andre. You're right on the ball. You're first in. That's wonderful. So if Andre can hear me, I assume everyone else can. Now, you might wonder, why do I always ask if you can hear me? Well, I'm a Luddite. And a Luddite is a person who doesn't have faith and doesn't really approve of new technology. And I'm in that class. I guess some of it's a function of age. I can remember when I got my very first computer. That was a joyous occasion. I was truly excited about it. And I turned it on and I sat down and I looked at it. And it looked back at me. And in fact, I went on doing this for about 4 months and nothing happened. And eventually, Windows was launched. And on the early Windows, some of you will remember, if you didn't know the MS-DOS commands for Microsoft, nothing happened. So once we got Windows, I had another computer and I looked at it and it looked at me and nothing happened. And it wasn't until Windows started putting up the picture that you could click on to get something to happen. So that's how much I know about technology. And over the years, I must say I haven't learned very much more than that. It's not something that excites me. And I guess I've been remiss in not learning to code and all the other skills of the modern person. But I've had other more important things on my mind, mainly trading markets. So today, I've got a lot of stuff to talk to you about, and all of those of you who are trading, I guess you're all pretty happy. We're in almost every market, and I think they're all profitable. And I'm going to show you those trades and some of the more recent trades in Forex and futures today. We don't talk enough about Forex. I actually started off as a Forex trader, and over the years I've moved more and more to futures, but Forex is a wonderful trading medium. We still have many Forex traders with us, and they're going to see some of their rewards today. So welcome, as I say, to the Danielcode, which is a set of proprietary ratios that control time and price in all markets. And what's come out of this journey, the Danielcode website went public in 2007, and I was trading actually well before that. But what's come out of it is the creating and trading Danielcode time signals. And that is the best trading system I know. It's the best trading system I've ever seen or heard of. And to date, nobody has seriously suggested to me that's either a safer or more profitable way of trading. Now, that's available through the Danielcode tutorial. If you're serious about becoming an elite trader, do let me know. jneedham@thedanielcode.com, and I will be happy to teach you everything that is knowable about financial markets. Okay, so one of the new initiatives we put in here, folks, is a free consult. If you'd like to have a chat about your trading, what your dreams and aspirations are, what direction you'd like to go in, then I'd be more than happy to talk to you. Most common questions: how much money can I make and how long will it take? Well, I will give you a couple of links very shortly that you can go and look at. And these are interviews that I've done with some of our super traders, people who came to me to do tutorials, and I taught them about creating and trading Danielcode time signals. So that's not to ignore price signals. As you'll see during this session, price signals are also a vital source of trading knowledge and, for us, profitability. Very, very important. But I'd like you to take some time and go through these 4 video links that I'm going to show you. If you have trouble catching them as we're going through the webinar, just go to the Danielcode website. They're all there, and take your time and go through them. And I think it's important because anyone can say anything about whatever trading system they're using or selling or trying to interest people in. And a whole lot of it, as you see, the internet is just covered with endless blurbs about how fabulous they all are. And I think it's not important how great your trading system is. I think what's important is how well your clients can do after they've learned your system. In other words, don't ask me about my trading, ask the clients what they've been able to achieve. That's in these 4 videos that we'll come to shortly. I do urge you to take the time because it's eye-opening. It's a revelation. It's a revolution, in fact, because this is a totally new way of trading, and I do recommend it to you. So here are those links, and you can see there's 4 of them. The first one's from Mark L., who's a super trader. Very interesting, this one, because Mark did his tutorial with me in about 2016, maybe 2017. And he's giving this interview, which is obviously also a testimonial, in 2023, 2024. So he's had many years to consider is this a system that's continuing to go on? Is it just going to be is it optimized for a particular set of circumstances, or is this something that will endure? And that's a very important question when you're looking at trading systems. The next one is from a couple in Colorado, Amy and Scott, lovely people. Amy had never seen a trading chart in her life, so it was a great test to see how well she would learn the Danielcode trading method. Videos 3 and 4 are from a young man in the Hunter Valley, Justin. Wonderful man. His father was a client before him and introduced Justin to me and to the Danielcode. And he is a guy who's an absolute workaholic. The research that he's put in to Danielcode trading time cycles and time signals is absolutely massive. And I do really urge you to take the time to look at these videos. They're about 20 minutes each. And they're totally different, and they're very important. And for all of you who've been kind enough to do these interviews with us for the benefit of our other members and guests, I do thank you. It's been most gracious of you to do that. Okay, so here we are, conversations. Couple of conversations during the week that I want to share with you because I learn a lot from talking to clients, people who are Danielcode members or people who are doing Danielcode tutorials. And yesterday I had my usual monthly conversation with Mick D. And Mick's an old family friend, and he's been a Danielcode member for a very long time. And he's a very, very good trader. He's one of our super traders that he's learnt from the Danielcode tutorials and the webinars and everything else that he does. And let me see, he's probably here today. He usually is. Let's have a look. I can see everyone's here. Akshay's here. Andre, we know. Bill, welcome to you. Haven't seen you for a long time. David J is here. How are you getting on with your tutorial material, David? About time we had another talk. Many other Davids right here. And George, we've got a number of Georges. Hello, George, that one in particular, George Tarr. Gregory Palladini, of course, Danielcode super trader, wealth manager, all-round good bloke, and owner of Bitcoin, is with us today. Wonderful to have you with us. Harold, my friend from Redding, California. Harold's a wonderful man. He's a gold bug and very, very knowledgeable about it all. Jen's with us, wonderful. Marcel is with us from Quebec. Marcel, thank you for being with us. I hope your health is really going well. Marcel's had a couple of health issues lately, but he's doing well. Mark L., famous, of course, as I say, we never have a party without Mark. He is a wonderful, wonderful support for us. There's another cute Mark and Mark's. Miles is with us. Here we are, Nathan, of course. Nathan, wonderful to have you. Peter Mack, who's not a day trader. Other Peters, Peter Juris, the other Peter, another one. Okay, we seem to have a lot of Peters today. That's great. And we've got Sean, of course, down in Adelaide. Sean, hope you're doing well. I know you're a happy family man, and you've done very well with that lot. So, having this conversation with Mick yesterday, I commented about the exuberance in markets, that all the world is a bull at the moment. The consensus is that it really is going to the moon this time, and the Nasdaq's giving a pretty good imitation of that right now. And in passing, I said to Mick, you know, when this thing turns, it's an awful way down. It's a long way. You just look at a normal 50-59% correction of the dominant swing at the moment. It's a long way down for a correction. And Mick said to me, oh, he said, I've forgotten, you're a bear. And I said, yeah, I'm always a bear, but I'm a bear in the sense that I don't believe in the value of almost everything that's being sold these days. I wouldn't be buying stocks at these prices. I don't want to buy a new car at these prices. I think they're ridiculous. I don't want to have anything to do with electric cars. Now, that's just my personal view. Don't hate me for it. But I believe that petrol-powered automobiles have reached and perhaps even past the peak time and period of development. They are the most efficient tool that you can possibly imagine, and they've been refined, as you know, for decades and decades and decades. So there's all just a few personal issues, but the point I wanted to make to Mick and to all of you is that what my personal feeling about markets and their values is has absolutely no relevance to trading, because to start with, markets go up better than 75% of the time. So if you're a bear, conceptually, you've got a problem if you let that affect your trading. I'm completely neutral about my trading. If I have a buy signal, I buy. If I have a sell signal, I sell. And being a bear, as I am inherently, is probably a function of my age and upbringing and values. And I don't see much value in anything these days apart from the love and joy of your family, and of course the wonderful, wonderful markets that make my life every day, because I'm so thrilled to have a considerable understanding of markets, and I keep learning things every day. I had a whole new webinar lined up for today on trade technique, trade signals, but really how the technique of executing them. And then that all got run over with what we're going to talk about today, but I will give you that webinar in the not too distant future. So that was the main thing with Mick, is to understand it doesn't matter whether you're a bull or a bear. What matters is that you know what the signals are for today. And to talk about mayhem, I mean, once this market does correct, it's going to be pretty sensational, because this bull mentality is so baked in. There are going to be an awful lot of people sitting there with what I consider total negligence, peddled by the investment and brokerage industry that is buy and hold, buy and hold. And I know the rationale behind it all, but the real reason is they're not comfortable that they can forecast corrections. So if you can't forecast them with a high degree of conviction, just avoid them, just buy and hold. And that's why they do it. That's stocks. This is different. We trade futures. And buy and hold in futures will get your throat cut, because the whole drive of futures, the whole reason for futures is, I believe, the leverage that's inherent in trading futures contract. But that leverage works two ways exactly the same. And it's a sword, but it's a sharp sword, and it's sharp on both edges. And it cuts just as deep both ways. So be neutral about how you trade. Take the signals, learn to create the signals, learn to see the signals and trade them. So that was my conversation with Mick. And as well as that, we had our usual chortle about full moon. S&P and silver in particular are very, very susceptible to the full moon. And so we got the reversal in silver 2 days ago. And the reversal was a sort of a semi-reversal on the day of the full moon in the S&P, but it franked it today with a much more convincing little bar down. So talking to two of my students this week, one of them, they're both charming gentlemen, one of them lives in California, and he came to me to learn to trade crypto. And what I said to him is, I'm not going to teach you to trade crypto. I'll teach you to trade markets, because Forex, which we have a big following of, and futures and crypto all work exactly the same on the Danielcode. Once you know how to trade, importantly, you know how to create and trade, excuse me, time signals, then all markets work exactly the same. And today, what I'm going to show you is almost every one of the futures contracts we cover, and all bar one of the Forex markets that we cover. And you will see how those markets turn with amazing precision on price. So we're TO3 plus signals that we create for you every day are essentially signals of price. They have a small amount of time involved in them, perhaps less than 20%. Maybe 20% would be a comfortable estimate, but they're essentially price signals. So you see today just how powerful trading price is with the Danielcode, because it has the unique capacity that what happens in the Danielcode is it creates targets, and the absolute fulfillment of a market turn doesn't happen without target recognition. In other words, target recognition, that is the market finding that Danielcode number at its high or its low, both are valid, or the close, high, low, or close. That is the most important precursor to any market turn. And you'll see that today in pretty much all of our markets. And as I say, we're in a ton of markets at the moment, and they're all profitable, which is not extraordinary. It's extraordinary to me because no one is more amazed by the magic of the Danielcode than I am. And I guess that's because I struggled so long for so many years with everything conventional in trading, and found that you made some money, you lost some money, but it didn't build the really strong, long-term, profitable curve that I wanted, which we get, of course, with Danielcode trading of either price or time or both. So my conversation with the two students, the first one was Gabe, who is probably with us today, excuse me, who came to me to learn crypto. And what I said to Gabe is, I won't teach you crypto, I'll teach you trading. And once you know trading, you can trade that in any market. And the point I wanted to make was that as a trader, your first obligation is to make money. It's a very venal business, and it's also a very simple business because that's your purpose. What's your business plan? What's your short-term plan? Your long-term plan? Pretty simple: to make money, to make profits, and to do that, we have a large range of numbers of markets that we can trade. We cover, I think, 11 futures markets and 9 forex markets, but there are more, and many of them are correlated with the signals we create. You can take those signals and trade them in your pet market, so long as the signal is elected or filled. And your approach as a trader should not be, I want to trade crypto. Equally, the vast majority of people, students who come to me, say, I want to learn to trade the S&P and gold. You shouldn't want to learn to trade the S&P and gold. They're both very good trading markets, gold in particular, wonderful trading markets, but you should be coming to the Danielcode to have the knowledge to trade any market, in fact, all markets. Well, you can't trade an unlimited number of markets because of the cost of margin. We understand that. Same with Forex. But if you learn which are the markets that are most profitable to be trading at the time and the various techniques that I'll teach you on how to select markets to trade, you'll find you should be almost always on a winner. And over time, you will be. Very interesting that Justin from the Hunter Valley, who gave us interview number 3 and interview number 4 on those interviews I showed you. For interview number 4, he went through a massive amount of research, literally almost any futures market you could think of. He analyzed it on a 2-year basis, and some of them more. And one of the things he found was he never found a losing year trading Danielcode time in a wide variety of markets. He never found a losing year. Isn't that incredible? Absolutely wonderful stuff. And we thank you, Justin. That's so important. Okay, so the other conversation I had was with a European gentleman who lives, I think he presently lives in Forex, but he's got a holiday house in the Auckland somewhere or other, I forget where. Wonderful gentleman, and he's a Forex trader. And he came to me to learn how to trade Danielcode analysis and time with Forex markets. And by the by, he just happened to say he was a very dour character and very together, and I'm watching him as I'm talking to him. I get to see his face. He doesn't get to see mine, so he's lucky. He's escaped that. But at the end of the our last tutorial session, he suddenly broke into a wide smile and said, just to tell you, Mr. Needham, that I've been trading the Forex signals on the TO3 Plus while this tutorial's been going on, so which is now about 5 or 6 weeks ago. And he said, I haven't had a losing trade yet. Well, the minute you say that, you're sure to have one. But I appreciated that. And what he's actually doing is he's telling us how incredibly consistent the Danielcode price and time signals are. Okay, so keep that in mind. Your job as a trader is to make money. It doesn't matter which market you trade. You should be trading markets that are active, that are moving up and down. Remember, with futures, we get paid exactly the same for a market that's going down as we do for a market that's going up. That's one of the wonderful things about it. So what's your business as a trader? The business of trading is making money. That's it, full stop. And we judge ourselves how well we're doing by how much money we're making. And the more money we make, the more efficient traders we are. And we can take you on that journey anytime you're ready. Let me know, jneedham@thedanielcode.com, and I will be happy to teach you everything that's worth knowing about financial markets. This is a little sojourn into the 6-day charts, folks. I've showed these to you a couple of times. They're terribly, terribly important. If you see how accurate these are. Now, this is a 6-day chart. Every single bar is created of 6 trading days, which is extraordinary. And the point Mick raised yesterday is, how do you know when they're going to end? Well, easily. Once you've created them, go and find their function per PER, and you just type in 6, you get a 6-day chart. So open another tab for those. But what is quite extraordinary is how incredibly accurate these markets are. That I tell you that for daily charts, we've tagged what we call target recognition, which is what you're looking at here at the top where that arrow is. We allow 0.1% variance, not 1%, 1/10 of 1%. It's very hard for markets to do that. And when you're on a 6-day chart, there's so much more allowance for the variability, and it's a lot more than 6 times 0.1%. It compounds the possible variation, but it doesn't happen. Somehow or other, these markets manage to create this absolute, what's the word I'm looking for, adherence, glue, attachment to these Danielcode numbers. So here's your 6-day chart, and you can see it's just as accurate as our daily chart. This one happens to be crude oil. Here's the next one. This is the S&P. Just absolute the setup. It gave us target recognition on its last completed 6-day bar. What do we get? Start of a reversal this week. Perfect stuff. DC target recognition, what was the variance? 6 or 7 ticks, something like that. Almost nothing. Here's gold, and this is a wonderful chart. We had perfect target recognition, 13 ticks from target 4 weeks ago, 5 weeks ago, and then we had a correction, then it rallied up to retest that high. Almost perfect target recognition all the way up. Little false break through the high. Remember, fast moves come from false breaks. This is an absolutely classical false break at the latest high, and that's why you got the fast move out of it right here. This is UST bonds, which to many of you, you think it's kind of haphazard. It's not. Nothing is haphazard with Danielcode. Have a look at this. 6-day chart. The low came in with 5 ticks variance from target. This latest high is a little space away from the red line. 8 ticks variance from target. 8 ticks. 1 point is 32 ticks. 8 ticks variance on a 6-day chart. That's like not even a human hair. That's nothing. And these charts, you're getting a totally different perspective on what markets are likely to do. So if that's helped you, do let me know. These charts are available to anyone who's subscribed to our Super 6 Danielcode DC website Super program. Go to the services page, click the link. You can subscribe to that program. As soon as you do, send me an email, jneedham@thedanielcode.com. Let me know that you want to have the 6-day charts, and I will be happy to email them to you twice a week as I create them. Right. It's Friday morning down under, folks, so if you hear me taking a break to gulp some coffee occasionally, that's exactly what's happening. And it's a beautiful day down here. It's sunshine. We're in early autumn here, but it still looks like spring to me. That's wonderful. But talking about mania, memes, and manipulation, we had this extraordinary event during the week involving a guy, I think his actual name is Alan Gill, and he's a prolific poster in social media and what have you, under the name Roaring Kitty. And he's been absent for a very long time from the market, or at least from his posting. And I guess this was probably last week. He came out with a new meme of a guy just bending over to his trading desk. And this gentleman, Gill, and his pseudonym Roaring Kitty, they're famous for their association with GameStop and the other associated one. It's the what's it called? AMC. It's a movie theatre chain. And he came out with just this simple meme, and whoosh, off it went. In fact, those markets rallied more than 70% on Monday and 60% on Tuesday, halting trading amongst volatility multiple times. So interesting. So that happened, and then of course, as soon as it happened, AMC took advantage of it and said they're going to raise a $250 million, I should say, $250 million of new equity capital the same day. So were those things just all happenstance? You can make your own view on that. But Business Insider commented, the market casino is back open, at least for now. So this is just a instance, an observation of how bullish these markets are, that it just takes some young fellow, I guess at my age they're nearly all young fellows now, to come up with his meme, and it can send these markets up 70% on Monday and 60% on Tuesday. Of course, they're all crashed back to earth now, but if you were set up with your 0-day expiration options or other short-term tools, those who knew got more than a lapful. So there's this whole theme that scares me of how ingrained this bull market is. And I don't know what it's going to take to shake people out of that. I suspect markets will have to fall a long way before the idea that markets can move both ways is going to gain currency again. And that's why I say it's going to be mayhem, because this bull market mentality is so ingrained that when the markets turn, as they will, all markets turn, what goes up pretty much must come down. I know at times it doesn't seem like that to equity traders, but it will happen. And we'll be thrilled, we'll be part of it. Think about this in a bit of detail though, folks. Before you start panicking, how will I know? You don't need to know. All you need to know with Danielcode is, what are the appropriate signals for tomorrow? You're not even trying to have a view of what the market might do tomorrow, but basically what you're saying with Danielcode is, I have these signals for tomorrow and I'm going to put them on. If the market doesn't get to the entry point, because all Danielcode signals have an exact entry point, exact initial stop loss, if it doesn't get there, fine. But if it does, we know in advance, at the end of every day, we know exactly what are the signals that we should create for tomorrow's trading. And by doing that, that means we're always with the market. The market cannot possibly turn without you if you understand Danielcode. So don't be frightened. Just learn Danielcode. You will be safe forever. Okay, let's keep going here. So all markets are manipulated. Well, I mean, what's been happening in some of these markets is absolutely extraordinary. US T-bonds, you remember they got totally whacked with the big increase in interest rates because bonds are a bit different that way, that higher interest rates give you lower face value of the bond. And the losses that the banks were incurring, or anyone, in fact, who was holding these bonds who didn't follow Danielcode, didn't realize we gave every sell signal from all the way down and pretty much said where it would go as well. So this was last year, of course. A couple of banks, Silicon Valley and Signature Bank, they were bailed out, or really they were insolvent. They were merged into another bank. And then what happened after that is the US Fed created a troubled bank lending facility. It wasn't called that, of course, but it was a massive, massive lending facility. And how they did it, first of all, don't forget, most of the banks are allowed to hold 50% of their government securities at face value. They don't have to value them mark to market, because if you hold them to maturity, of course, there's no risk of loss. So excuse me, so when they created this huge bank lending facility, what they said is we'll lend to anyone who's regulated by the Federal Reserve, and we'll value your assets at face value, not mark to market, mark to fantasy. In other words, assume they're all going to be held to expiry and redemption. That is the most blatant issue of trouble in markets. When markets themselves, when the assets are not marked to market, that's what causes a big problem. And we have seen this occur again and again and again over the years. This was what the 2007-2009 mortgage securitization crash was about. They were not marked to market. They went on indefinitely for very long periods without their real value being disclosed. So when it all happened, of course, it hit the fan, and you remember how dramatic that fall was down into 2009. That's simply because they were not marked to market. Now you have the Fed not only allowing you not to mark to market if you're one of their overseen banks, but will lend you the money not on the basis of mark to market, but on the basis of mark to fantasy. So your Fed, controlled by the federal government, of course, is implicit. In fact, they're explicit in this effort to avoid losses by postponing or simply ignoring mark to market, which in my view is the most important procedure for investors to be able to adequately value their assets. So remember that markets run largely on narratives. This narrative is just a story. And stocks in particular largely run on narratives, and we're trading derivatives of group stocks. Don't forget that. What happens in the stock market is exactly what we're trading. We're trading where the value of those 30 for the Dow, 100 for the Nasdaq, 500 for the S&P, etc., 2,000 for the stocks for the Russell, where exactly all of those numbers are at any moment in time, plus or minus. If we're bullish, a premium; if we're bearish, a discount. And that narrative is created by the big brokerage firms. Really, it serves to convey immediate sentiment, but it's not immediate enough. And you can't rely on any of this narrative, as I call it. Think about this. All of the prime brokers, all the big names, JP Morgan, etc., that lot, all hated crypto. They hate it until they are able to join the plunder. In other words, today's big news is that this has been a massive debate in politics and government, and eventually they forced poor old Gary Gensler, who's the head of the SEC, to approve a spot ETF for Ether. Huge news. And as you can see, this little note here, this time the approval came for spot Ethereum following what was reportedly urgent political intervention from the White House. Interesting stuff, isn't it? They hated it. Now they love it because they could get fees out of it. That's how shallow the whole lot is. So any ideas about a narrative, make sure you think about how quickly it can change, as it has here. Here we are. So interesting. The Bloomberg's ETF expert, Eric Balkanas, he gave a spot ETF only a 25% odds of approval. But political interference, that'll get it done. And apparently that came right from the White House. Why that is, it's hard to think of or wonder, but somebody in Biden's sphere thinks it's a good idea. Okay, so the thing to keep in your mind is don't be lulled out of this idea that inflation is over. It's not. And it's silly how some of the governments are dealing with this. Australian federal government's a new government we've got. They're socialists at best and complete idiots at worst. They just brought out a budget that was highly, highly inflationary. It's forecasting deficits as far as you can see. But then they turn around and they say, we're going to give $300 back to every household to ease the cost of living crisis. I mean, $300 isn't going to solve problems for people who are having trouble putting food on the table. It's not going to solve problems for people who are renting as rentals go through the roof again and again and again. And all of this inflation, of course, the vast majority of it is caused by government action. This all started with the COVID scare. Every government, and this is not aimed at the US government, Australian government, any government, they all did exactly the same thing. They got panic. They threw so much money at the various methods of reducing the effects, if they could, of COVID, that they were just splashing money everywhere. Biden, you have to think up, it is just totally ludicrous the amount of money that the Democrats have loosened into the US financial system. In fact, it's so huge that some of his major bills, one of which was, I think, jokingly called the Inflation Reduction Act. Nothing could have been more inflationary than the spending of that in billions. They've only managed to spend 17% of it a year later. They can't even spend it as quick as they're approving it. So if Biden gets another term, what's going to happen will be exactly the same. It'll be just spend without any reference. All left-wing governments do that. In fact, most right-wing governments do that as well. Because if you think about it, what's the appeal that politicians have? Oh, I'm going to make things better for you, the voter. I'm going to provide better schools for your children. I'm going to provide more security for your community. I'm going to give you better opportunities for jobs. I'm going to pay for your job training and retraining. In other words, all of the appeal of government involves spending. It's like silly Rishi Sunak over in England with his wonderful plan. Let's bar cigarettes for everyone, starting if you're age 6 or 8 today. Your whole lifetime you'll find you're not allowed to buy cigarettes. Is this the job of a conservative government? I mean, it's ludicrous, but the guy himself is ludicrous. Total joke. The British Conservative Party, they're going to be tossed out unceremoniously, and so they should. Their greatest vote getter, Boris. No one ever said Boris was the world's greatest manager. He was a party man, a fun guy, liked to drink, liked to party, but he was a force of nature as a campaigner, the best campaigner that the Conservatives have seen for a very, very long time. So they sacked him. Now they've got this, not quite sure what he is apart from married to one of the world's wealthiest women. But to me, it's been tragic to see the demise of the British Conservative Party. Anyway, that's their problem. I don't live there anymore. Never. I did live as a kid. I was there for 5 or 6 years. So another Biden term, going to be more inflationary. If Trump wins, do you think he's going to be a model of rectitude? Do you think he's going to be a model of fiscal restraint? Well, he's never shown that in his life. In fact, quite the opposite. Trump is inherently one of the big spenders, and you'll just see more and more of this inflationary pressure. The very simple point I want to make is that we were living in New Zealand for a long time, the most beautiful country you can possibly imagine. New Zealand and Ireland break your heart to see the physical beauty of those places. We'd come back to Australia, and this was to April 2013, when things were booming along pretty good. But I know specifically what the interest rates were at that time and the appetite of banks to lend. And this so-called clamping down on inflation by wrapping up interest rates has not even got to the levels that we were at in 2013, when there was no suggestion of an inflation or any bank tightening or anything else. Never even got to that level. So it's jawbone stuff. There has not been They haven't tightened enough to even get back to 2013 levels. That's for the US and Britain and Australia and New Zealand and most of those Western countries. So the attack on inflation is really a bit of false stalking. They're doing what they have to. They're trying to jawbone it down. But if it flares up again, it's going to be tough. And both the Fed has now come off its instant, the narrative that we're going to have early and prompt interest rate reductions, I should say. That's gone. The Fed's killed that at their last meeting. The Australian Federal Reserve, our Reserve Bank, called the Australian Reserve Bank, they've left interest rates unchanged at their last meeting, signal that further increases may be coming. In other words, people recognize, intelligent people recognize, that what's been done to curb inflation so far is the bare minimum. And if it flares up again and they have to take tougher steps from here, then it's really going to hurt. Have a look at this chart here. I just put the word mayhem on. What this shows you is the barest minimum correction of the two most recent swings. The current correction, if it comes, is going to take it down about 16-17%. This is the S&P. If just the dominant swing of the moment, which starts from October 23, if that's corrected, it's going to take 24-25% off the price of this market. And people are going to be sitting there, fat, dumb, and stupid, saying it's a bull market. I promise you it can change from a bull market to a bear market very, very quickly. And bear that in mind. Be on your guard for it. Just follow the Danielcode signal. You'll be short when you should be short and long when you should be long. Okay, so folks, this is Forex, which we don't talk about nearly often enough. And for that, I apologize. It's a wonderful trading market. It loves Danielcode. This is the Aussie US dollar. Have a look at this hit up into the blue line at 67.14. Just a matter of a handful of ticks away. I can probably tell you exactly what that high was. I'm not going to spend a lot of time doing this because if you're not in that market, it probably bores you to death. But looking at that high that came in on May the 16th, that high was 67.14. There's your blue line, 67.14 for zero variance. Now we allow 0.1% variance. Now we've got zero variance. And that number has been on the chart for weeks and weeks and weeks. It's not a recent addition. So don't forget, make sure you look at the members chart. Take these numbers, put them on your chart, see what happens. Learn to train your eye to see what happens at these Danielcode price targets, which are created from the Danielcode time cycles. If that sounds like a contradiction, it's not. It's amazing, it's extraordinary, and here it is. There's our current sell in the Aussie US dollar. Here's CAD Chief to TO3 sell signal in at the high. That high, 67.91, one of the retracement levels, and the particular high which came in on Wednesday was at 67.00 against the red line. I should say I've misread that. It's actually 67.01. One tick variance. Can you believe it? In fact, the 2 bars before that, you had target recognition as well. So it's there. It's working for you. Euro USD, we had a TO3 and blue line sell signal at the high in the Euro USD. That high, having said I'm not going to spend much time on it, I love this stuff, that high was 108.949 against 108.954. 5 ticks variance, that's all. That's our short signal in which we're still in here. This is going to click tomorrow. This is the British pound Japanese yen pair. We had a TO3 sell signal on Wednesday. Remember, these signals, TO3 signals, are valid for 2 days, including the day of posting. So that could well get elected tonight. It's put in a key reversal bar. It's probable it will. And it's given you almost perfect target recognition on that key reversal bar with its high at 199,893 against the number there at 199,877. Wow, the hay fever is roaring today, folks. Do forgive me. British pound USD, same thing. TO3 and blue line sell signal, we're short. We had the buy signal all the way up. This is dollar CAD. We're on a TO3 buy signal here. We've had 1, 2, 3 days up, big days up. Looks very nice, doesn't it? You've got target recognition now, so beware. This is dollar yen. We've had 2 run-ups here, both coming from TO3 signals up and down and a time signal as well to add to it. And we've got a TO3 signal current on today's bar for the dollar yen. So there you are. The high of this bar today is 157.192. Where's our blue line? 157.246. That's target recognition. Could well be elected tonight, that sell signal. Okay, so if you're interested in becoming an elite trader, folks, I urge you, take the Danielcode trading tutorial. It will teach you to trade just the way I'm talking to you. You will never miss a turn. And we've got some very, very experienced traders who've been kind enough to put their name to these comments as you see further down. Greg Palladini's with us today, of course, and Mark L's also with us today. And they've had their lives changed. In fact, talk to Mark, that's his most common comment. Danielcode and John Needham have changed my life. Big statement, isn't it? And thankfully it's true, as these guys have been happy to testify. So creating and trading Danielcode time signals, that's the big deal. The guys who you're going to see on those videos and hear them talking about their trading, they're using Danielcode time signals. These are the guys who are talking about making 700% on margin, 800% on margin. Mark L over 1,000% on margin over a year, a whole year. Extraordinary stuff. No one's ever thought it's possible, and now it's happening. So this is your opportunity. Email me, jneedham@thedanielcode.com. If you need to have a chat about it, let me know, and we can do that as well. So let's have a look what happened in the futures. We've been short this market for 4 or 5 days. Look at the way this market is searching for support. It's trying to find support. It's just been sitting there the last couple of days, poking through. It found the black line at 76.76, 76.67. That's a red line of a major retracement. The black line at 76.77 on the minor swing, the market has to close below that number on a daily bar before it can go further down. So just be aware of that. It's a wonderful way to understand what markets are doing. This is the US dollar index, folks. Now, some time ago, we stopped covering the US dollar index because it's in the ICE. It's an ICE market, not traded on the CME. And you might remember at the time I said, keep an eye on this because this market is most important, of course, for Forex, also for gold, and therefore by correlation for silver. So we've had a turn almost exactly at the 103.945 black line. 3 or 4 ticks variance was all it was on that key reversal bar. It's actually a theoretical key reversal bar. The close the open, I should say, is below the low of the previous bar. So it's not theoretically a key reverse bar, but it looks like it, and it acts exactly the same. And off it's gone. And it's this rally that's caused some real wonderful trading opportunities in Forex that I've been showing you. So keep an eye on that. This is the S&P. It's been trying to find the number. It's been searching for the number around that 534175 mark. It's been there on 4 occasions, and we had a sell signal off that last upside bar, valid for 2 days. The next day got short, and it's also valid for the next day, where if you were trading time, excuse me, you got long and then short on the outside bar, and you're currently short. This is gold. TO3 sell signal. 1, 2, 3, 4 days ago, straight down. Lovely, isn't it? The run-up was just as good. We had it was a 3-leg run-up. This has gone straight down, and it's closed pretty well near the low. So there might be more to come. Incidentally, notice there's a gap down into today's bar. Markets hate leaving gaps. It'll make a real effort to try and recover that. And you can see over here, this is the same thing. Here's the gap on the run-up. The very next day, this came exactly down to the close, which is what it does to cure the gap. Here's copper. Been a lot of talk about copper lately. BHP, probably the world's biggest copper miner, is trying to engineer a takeover slash merger slash whatever you like with Anglo, who's the other huge copper miner. Today's news, it looks like it might go ahead. But big run up. Lots of people writing that was a sign of doom. It wasn't a sign of doom at all. It was just trying to find its Danielcode number. Then it turned, perfect TO3 signal, little inside bar, and 2 days down. And it's found support exactly at the red lines, as these markets do. This is natural gas, which had a TO3 sell signal on Wednesday, valid for Wednesday and Thursday. It came on Wednesday, it's valid for Thursday and Friday. So we've now had a key reversal bar. This is a true key reversal bar. Probably get that sell signal elected today, Friday, I should say. Here's the NASDAQ for you folks. Mick was anxious to short the NASDAQ when we were having our full moon lunch yesterday. And I said to him as I was leaving, my orders are on. If it elects the order, I'm short. And I guess so is he, as should all of you be. TO3 blue line signal exactly at that high where the arrow is. This is the Russell 2000. We had a TO3 sell signal right at the high. We had a correlated TO3 sell signal, another one 3 days later. Down it goes. We're short. It's wonderful. It couldn't do any better than it's doing. Here's soybeans. It's another one that's got a current TO3 sell signal on it. It put in a key reversal bar. It's had target recognition for the last 3 days. If you go back 3 days, you can see that quite clearly. And that sell could well get elected on Friday. Silver, of course, we always, excuse me, joke a bit about S&P and silver at the full moon. Well, here it is. We had a sell signal in the middle of this chart, and that sell signal was a valid signal which was elected, so its failure point becomes the TO3 flip me signal, flip me buy. I put it on the chart there for you. It's a bit hard to see because there's a red line just underneath it, but the high of the sell bar becomes the flip me point. If that sell stop, the protective stop on the sell order, which is 2 ticks above the high of the setup bar, if that's voided within 3 trading days, then that flip me tells you you're wrong. And if you're wrong, you need to do something about it. And what you need to do is get long. So we had a small loss down there. Then we got $11,500 win running up at the inside bar the day after the TO3 and the blue line sell signal, and then another nice day down today. Pretty easy, $15,000 for just knowing where your orders were. This is UST bonds, which we had a buy and a failed buy, so they're the same thing. The failure point was the low of the setup bar minus 2 ticks, which was 116 correct 23. That little arrowhead is called a correct. And the low of Wednesday's bar was 116 correct 22, if I remember correctly. It's amazing how accurately these markets can manipulate themselves so that they are following what the Danielcode says. Here we are. So the low of that bar on which we had a buy signal was this bar back here. It's Monday, May the 20th. The low of that bar was 116.25. So that sets up, the trade was elected the next day. Its failure point is 116.25 minus 2 ticks. We always use the 2 tick buffer in Danielcode. Means the failure point was 116.23, and that was not elected on Wednesday, yesterday, but is elected, of course, today. So the flip me point, as I put on the chart here for you, flip me sell here at 116.23. It's pretty neat, isn't it, really? Quite wonderful. Excuse me. So I'm showing you these 4 interviews again, folks. We're a little bit over time. I do urge you to take the time to listen to them. And let's see what we've got here. Reminding you about the one. Oh, yes, Akshay, my friend. I'm sorry. I'll do that for you today. It'll be with you today. Folks, if you haven't already, do take a free trial of the Danielcode. Go to the website, www.thedanielcode.com. Click the register button. Any issues, contact Terry at support of the Danielcode. He'll get you sorted out. And finally, of course, we always show you our disclaimer. And I do ask you to be really, really cautious about your trading. If you're new to trading, don't start trading with real money until you are confident of your own abilities. It is very easy to lose all your money trading. You can lose your bank very quickly. In fact, 90% of people do in the first month. Make sure you've learned how to trade before you risk real money. Okay, that's us. Thank you for being with me today, folks. And it was lovely talking to you, having the pleasure of your company. I see a whole lot of people have come in a little bit later. Rose is with us. Wonderful to have you, Rose. We don't have many ladies. We do want to welcome them when they come. Miles has arrived. Many. Excuse me. Even Chip Stevenson's turned up. Good on, Chip. Hope you're well, my friend. Wonderful to have you all here, folks, and I look forward to talking to you at our next session. In the meantime, Anthony D.D., who used to be a broker and now a private trader, is here. In the meantime, any personal interest you have in particular items of trading, if you'd like me to talk about them, do let me know, and I'll be happy to talk about them at the next webinar that we have. But for now, it's a good night, and thank you, and have a wonderful and safe weekend. Goodbye for now.